Welcome back to the Dividend Diplomat YouTube channel. You got your boys here, Lanny and Bert, the Dividend Diplomat. Today we're going to talk about a stock that's yielding over 3%. This company is down 50% over the last year. Guys, is this time to jump on the bandwagon? Is it time to buy this dividend stock, or is it time to run as far away as you can?
Guys, smash that subscribe button. Give us a nice thumbs up. Down over 50%. Down also this year in 2025. Again, there's a lot of concerns about the direction of the economy. Consumer sentiment hasn't been this low in a very long time. Credit card debt is at an all time high. Consumers are struggling right now to make ends meet. Now, the question is typically during these time periods, consumers resort to staying at home, making more food, but usually one certain industry type of store typically does well. And what are we talking about here today, Bert?
Well, we're talking about Dollar General, ticker symbol DG. We've gotten a lot of comments on this company. A lot of people asking, is it time to buy Dollar General? Question is, up until today, we hadn't really taken that deep of a dive into this company. So that's exactly what we're going to do today. Lanny, you are absolutely right, though. When times get tough, people are always looking for value. People are always looking to save an extra dollar or two. So they're going to head over to the dollar stores. They're going to head and see
Or
what
just to
value.
spend a few dollars of what they have just to get
Yeah.
something.
Yeah. And Dollar General should benefit from it. You're absolutely right. Interesting thing, though, this dollar store, not so much, my friends. They're dealing with some issue. You highlighted some very big economic factors, lady. You're absolutely right. Consumers are strapped. Dollars aren't going as far as they are. People have a lot of credit card debt, but on top of it, there's another political layer that's causing some turmoil for Dollar General. And a lot of these cheap discount people, it's the looming tariff discussion and how tariffs are getting ping ponged around right now. Whatever you believe is fine. I don't care necessarily what anybody believes. That's not our business. But you can't deny the fact that it's impacting Dollar General because they have to get those cheap products from overseas to be able to sell them cheaply to people here in the United States.
Yeah, exactly. All those small little items typically aren't coming. I mean, there are a good portion from the United States, but again, a lot of imported items, guys.
Yeah.
And, that has just continued to send the price downward. Now,
Yeah.
they're a big company, 16 billion in market cap. Again, you know, people are usually shopping there, so it's not like they're losing too much foot traffic, but it's more of what is going to be the impact to earnings, and is this a good stock to buy right now, or is it time to stay away from the dollar stores here?
Yeah, that's absolutely right. And before we jump into the screener, their last earnings release was actually pretty interesting lately because this was in December, so we still have a lot to learn and a lot's changed since then. They actually were down. There was some softness in guidance. There was softness in revenue and earnings because of all the hurricanes that happened in the fourth quarter, and that feels like such a long time ago. Where there was flooding and there were all these hurricanes that were like impacting getting the goods across the country. They were having softness from there. Layer in softness in getting your supplies across the company to tariffs on top of everything. It's 2025 is going to get sent for some like extra. We're going to juice that up here. And maybe, Lanny, do you want to highlight some of the balance sheet? There's another point I'll get to that in a second, but it might be helpful. Do you want to cover some of the
Sure.
balance sheet metrics?
Yeah. So from a current ratio, which is current assets over current liabilities, Dollar General, again, ticker symbol DG, has above a 1.15x current ratio. Now the issue is when you look at the quick ratio, again, we do like over one, but with the quick ratio, we typically want at least zero point 0.5 or higher. Quick ratio is when you strip out the inventory in case you can't turn it fast enough. So it's current assets minus inventory divided by current liabilities. And you actually are at a low 0.15x, which means their liquidity actually is heavily tied up in inventory right now. And then when you slide into the total debt to equity, not extremely alarming, but still relatively high at 2.39 times equity from a debt standpoint.
Yeah, so that to me is critical. They have a ton of inventory
I've
sitting there.
seen worse.
Yeah, yeah, ton of inventory. So they're already not liquid enough because they're just not liquid because so much of it's tied up in stuff sitting in warehouses, shipped, getting sent around, raw materials, whatever. They have a lot of debt. But then you pull into the earnings release, Lanny, and there was an interesting nugget from there. It's going to be a heavy capital expenditure year for Dollar General too. So they're expecting to open up 730 new stores, remodel 1,620 stores, and relocate another 85. So they have so much that's going on here. They don't have a ton of extra cash sitting there, right? They have a lot of debt already. Their debt to equity is already high. They're levered. Can't deny that. And rates aren't coming down soon either. So interest expense is going to be high. But then they have the tariff uncertainty. You don't really know how the impact of the bottom line is going to happen, when these tariffs are going to go into effect, what the percent's going to be. Sometimes it's 25%, sometimes it's 60%. It changes every week right now because there's so much uncertainty.
100%. Yeah, I mean,
Yeah, who knows? But then you layer in how much money they're about to pour into like the fixed part of their business too. That's not like that's going to sure maybe help generate revenue, make the stores better, like overall, but that's not immediate returns here for Dollar General. So there's just a lot of cash getting tied up and probably going to take on more debt to do this because there's not a lot of extra cash just sitting around for Dollar General. They're going to have to lever up probably even more to fix these stores. And that's what's so fascinating about this company right now.
well, guys, we're going to dive into the metrics here. The DD Stock Screener: 1, price to earnings ratio; 2, payout ratio; 3, dividend growth rate. Again, stock prices are as of close of February 28th, the end of February. Ticker symbol is DG. They are trading at $74.18. Again, this stock used to trade well above that. Again, they're down 50% since February of last year. So losing half the value in 12 months alone. Again, PE ratio with the earnings expectations comes out to be about 13 times right now.
Yeah, and that's below their 5-year PE ratio from Seeking Alpha of about 19. So it's trading at a discount for obvious reasons.
That's good.
It just dropped 50%. So that tracks. Dividend $2.36. That payout ratio is 41%. So that's the payout ratio. It's in the low end of the range, but again, they can't really afford to increase that dividend too much, Lanny, because a lot of that extra cash from any earnings that are coming in for Dollar General are going to be poured into fixing the stores and getting that inventory, some of these extra costs that are coming along.
Yeah, it'll be very interesting if they can keep the streak alive in the fourth quarter this year, maybe half a cent or something like that.
Who was that company, Lanny? Because what you're seeing with Dollar General, they increased it in beginning of 2023, and they haven't increased it since. So they technically increased it because 24's dividends were higher than 23.
Right.
Who was that company? Oh, was it Exxon?
Exxon did it. There's a couple tricks to that trade, but yeah, Exxon was one.
Yeah.
So Dollar General, they did that then already, and now it's put up or shut up in 2025 because all 4 quarterly dividends in 24 might be the same here in 25 unless they somehow increase it by the end of the year's dividends. So we shall see there. But they were doing it for 7+ years at an average rate of 13%.
Yeah. So they are not afraid to juice up that dividend, obviously, but they've done the smart thing. I'll give them that. Even though they haven't increased their dividend, if times are getting tough and the stock's dropping 50%, that's probably the time to hold your dividend flat.
Right. Now, again, the dividend yield, because they're down 50%, guys, I mean, the dividend yield has swelled up to over 3%. I remember when this dividend yield was always historically below 2%. So, you're getting yield, you're getting paid a little bit more for the additional risk. I'll say that.
Yeah, that is true. It's higher than its average yield, absolutely. So that's Dollar General in a nutshell. So the question is, Lanny, they're down 50%. That yield is over 3% now. Is this the time to buy Dollar General? Is this a value right now, or is it a company to stay away from?
Personally for me, because it's retail and because there's such a niche and, there's too many, again, headwinds on them right now, I'm not interested in the dollar store arena.
Yes, I agree. And to add to it, I just don't like where this balance sheet positioned. I don't like the uncertainty that they're facing. They are so dependent on goods from overseas. They are very exposed to tariffs right now. And when you're doing that with a highly levered balance sheet and a lot of capital expenditures coming down the pipeline, it's just a recipe for a really tough 25. And for me, I'm trying to slim down my positions, or I'm trying to be a little bit more thoughtful when I go into a company that is facing some headwinds. I want to have a little more certainty. And I agree with you. The dollar store sector is just not what I'm looking at to invest in right now.
Exactly, guys. So let us know what you guys are doing with Dollar General stock. Again, we wanted to feature it on here since a lot have requested this through the messages, through the comments. What other stocks are you buying right now? Again, are you steering clear or are you going to buy DG stock?
Yeah, and also if you have a consumer experience of how you're shopping at dollar stores right now, do you use Dollar General? I know a lot of people say their Dollar General is the rock star in the town they're in. A lot of people go to Dollar General. Not the experience I have here in there, but I'd love to hear because it's always good to have that intel on the ground level. Like, what do you see from a Dollar General in your community? I'd love to hear that.
Yeah, guys, like the video, subscribe to this channel. And we got one thing left to tell you, brother. You're either with us or you're against us, Jack. That was Bertha Hurt and Lanny from the Dividend Gosh Damn Diplomats. Over and out.